Hi, everyone, and welcome to week 4 of our series on how to scale and sell your business. So, this week we're looking at how to identify and enhance key value drivers which can make your business more attractive to potential buyers, which is great because it will ultimately lead to a higher valuation and a quicker sale. When a lot of businesses take 18 months plus to sell, and only 20% of businesses listed with brokers actually sell. This is a really important week, so hope you get really good information out of it. We'll go through the 5 pointers and then I'll take questions at the end. So first of all, what are the key factors when driving your business valuation? And I think the most important thing is to really understand what the buyers are looking for, because that is crucial in maximizing your sale price. Just like when you're selling your house, if your house looks absolutely amazing and it's in a good location and everything's your garden's looking fantastic, you'll have loads of different buyers that are interested in that. Really pushes up the value. So these are the things to consider. So identify your financial performance metrics, like your revenue growth and profitability. This is because stronger financials indicate to your potential buyer that there's a lower risk and higher potential return. So getting your finances right is really important. Your market position, you have to be 100% clear where you are and what your differentiation is from anyone else. A solid market position will suggest sustainable competitive advantage, and that will encourage more buyers. And you also want to make sure that operational efficiencies are in place, so that they can get immediate profitability. They'll often be taking out some sort of loan or wanting to pull some money from the business after acquisition. So these pointers are all really important. So why do these bits speed up your sell and increase your price? Because um, buyers can easily justify their purchase to stakeholders. If they're borrowing money from a bank, for example, they'll need to do these 3 factors to show the bank that they can have a low risk return. There's also a lot less negotiation that's needed over company weaknesses if you can prepare in these 3 areas, and you'll drive multiple interested buyers like you would want to do when you're selling a house. So I work with a UK manufacturing SME, and it um, it tried to sell its business and it didn't do very well. So we worked together and actually were able to deliver a consistent year-on-year growth and market leadership in its manufacturing niche. And then when we put up for sale the next year, he had 3 buyers that were interested in the business. So he got nearly double what he originally wanted. So those are the key factors that people will be looking for. Now let's move on to the next one, is your intangible assets. This is always an interesting one and I get asked about it quite a lot. If you're interested in intellectual property and how much that value that is worth, I do have a good friend, Ben, who will be able to give you a free valuation and an indication of how you or whether you need to protect your intellectual property. And it's a really worthwhile process to do. But also, how do you look at other intangible things like your brand value? Intangible assets can really significantly boost the value of your company and its attractiveness to buyers, because strong brands reduce marketing costs and customer acquisition costs. So if you've got a well-known brand, possibly one that's been promoted really well on social media, that's brilliant. Valuable intellectual property provides a competitive advantage and potential new revenue streams. Any potential buyer of your business will be concerned that somebody else is going to copy it. So that's why intellectual property is good, and it's definitely worth having a free audit of that. So get in touch if you want to do that. And also how to quantify the value of customer relationships. Strong relationships provide immediate cash flow. Now, whilst a lot of buyers won't want you to rely on just one customer in case that customer goes, to know that you've got strong and returning customer base is massively important when it comes to the valuation of your business. So I'll give an example of a UK software company that I worked for. They did a little bit of an audit, and they had some proprietary algorithms. So quite a few big tech companies were interested in there. They'd had it protected. They went through a process with this chap Ben I mentioned, and as a consequence, the bidding war progressed, and they got 40% more for their business when they went to sell it because the IP was protected. The next one is the strength of your management and wider team. Now, obviously, most people sell their business because they want to sail off into the sunset. That might be because you want to retire, you want to spend more time with your family, or it might be that you want to go off and set another business up. Buyers are cognizant of this, and they will really want to make sure that if you're not there, that the company will work well without you. So the team that you have around you is a major draw for potential buyers. They want to make sure that there's a strong management team because it reduces transition risks and make sure that the company doesn't collapse when you go off to do whatever you want to do afterwards. And it also ensures that there's really strong operational capability. A lot of people who will buy your businesses will probably be strategic buyers, so they'll be looking to maybe add it on to their own business, and a good management team makes it much easier to integrate and also to scale after they've bought the company from you. So you've really got to start thinking about how you can pass over responsibility to the people in your team and build those up. It speeds up the sale and increases your price because buyers are more confident in the future performance of the business, and they need to put far less investment in to either hire somebody to replace you or to train people. And they also will get much better knowledge transfer because although you might have a handover period, you'll not be there for many months probably, so they'll want to make sure that the existing operations is that there's people in the business who understand that in minute detail. The fourth out of the 5 things that you really need to think about to increase the valuation of your business is recurring revenue streams. Now, this is my favourite, and I've got to say they're really highly prized by buyers across all industries. Why is recurring revenue so important? And this might be through subscriptions that you have, for example, or a membership site. But when you've got a load of your customers who will give you a monthly fee, it's absolutely brilliant for your valuation. It will give you predictable income and reduce financial risk, which means that whoever's buying your business in the future will be able to get lending to buy that business much more easily. It's also much easier to forecast and plan for future growth because you know that you'll have that regular income each month, even if the economy changes and you have ups and downs in terms of other income. And it also indicates that you've got a customer base that's really strong and dedicated and really supports the product or service that you have. So if you don't already have a recurring revenue stream, I would look to put something in place. I work with a lot of companies where we kind of instead of having, for example, a membership fee of £300 a year over a 3-year period, if you can do it as a £10 a month recurring revenue stream, it's much more attractive to potential buyers. It speeds up the sale and increases the price of your business because buyers are willing to pay a premium for guaranteed future income, and that's more or less what you get when you have that recurring income stream. They'll get easier financing to buy your business, and it will really attract a wider range of buyers, which will help to have a little bit of a bidding war in potentially. There was a software as a service business that I worked with, and they put in place a couple of years ago subscriptions. And so when they went up for sale, they actually had both strategic buyers that were interested, as it was something that they could add on to their own businesses, and financial buyers, because it was such a steady income stream that they could rely on. So they actually closed their business sale within 3 months of putting the business up for sale, which was quite incredible. It can take up to 18 months to sell your business, so that's really quick. Recurring revenue is definitely something you want to look at. The fifth and final one of the 5 points for increasing the value of business is about being able to demonstrate future growth by looking at this. Really increases your sale price if you can actually show that there are plans in place to have future growth in the business. They'll want to look at all opportunities to scale your business afterwards. So if you've already got a business plan that's in place, which has got a clear indication of what your potential new markets and customer segments are, that's a really good starting point. They want to look at opportunities for product or service expansion. Now, the quickest and easiest way to do that is to put all of your products and services on a table, along the top of the table, and all of your customers down on the side, and then to tick a box where that particular customer buys that particular product or service. Then you can see where all the gaps are for all of your current customers and what they're not buying. And suddenly it opens up a huge amount of opportunities, the easiest way to sell more in your business. So make sure you include that in your business plan, or have a document for that. And you also want to look at potential geographic expansion. Many people will, having bought over 70 businesses, mostly the reasons why I do that is to have geographical expansion. So buyers will want to do that by buying your business, but they'll also want to see that you've taken that into consideration. Where else your business can expand to, and that might be domestically within the UK, or it might be to another country, but it's definitely something that you need to consider. If you've got the ability to enter new markets or customer segments quickly, it will make your business much more attractive and valuable. So why does this speed up, sell, and increase the price that you might get for your business when you decide to sell it? Well, one, it really attracts growth-focused buyers, and these people are willing to pay premiums for your business. The next one is to create an urgency among buyers to get in early, to maximize the return that they can get for these new opportunities. And finally, it allows the valuation to be on your future potential, not just your current performance. The most typical way of any business being valued in the UK is through a multiple of your EBITDA, so effectively your profit. Now, that's a great way of doing it. If your profit is 500,000 this year, but because of these growth opportunities, it's going to be £1 million next year, then the amount that they'll have to pay won't be double. It will probably be about 3 times as much. So they'll want to jump in quickly. So it's definitely something to think about. For example, I work with an e-commerce SME, and they put in detailed plans for an expansion outside the UK into the European market. So they suddenly attracted interest from a load of international buyers, and achieved a price that was much higher than they originally wanted, because it had factored in future growth. So those are the 5 areas of growth. There's quite a lot to go through, although it's quite straightforward. It's really important to follow a plan, and that's what we can help you with on the Self-Success Circle. So we've talked about the key factors driving your business valuation today, and we have tools and processes and workbooks that you can use to walk through that, and we can also hold your hand with that. The intangible assets are one of the biggest things that makes a difference in terms of the valuation of your business. So I would really recommend a free audit of your intangible assets to see if there's value in there that needs to be protected. And that saves you having to spend a load of money if it's not important. The other thing that you can do is strengthening your management team. And we give you all the tools to be able to do that and how to audit where everyone is at the moment so you can make a plan for that. And you really want to highlight your growth potential to excite potential buyers. So we have market and product and service tools that will help you to look at that. So the Sales Success Circle is currently free for the first month. It's a monthly membership site, and it gives you over 100 tools and hand-holding support to be able to make those improvements in your business. Ultimately, with the Sales Success Circle, we work so well with people, and they love the work so much. You fall back in love with your business, and a lot of people who are thinking about selling their business decide to keep hold of it because they're enjoying it so much. So it's definitely something we can do, and we can assess as we go along, free of charge, the proper valuation of your business as well. Remember, the competitive M&A market, businesses that tick all of these valuation boxes are really, really make a difference to your valuation. And not only will you sell at a premium price, you'll sell a lot quicker. So think about the value drivers that we have today, and once you're ready to sell your business, then it makes you a really attractive target for our network of buyers. We've got a network of about 500 business buyers when you're ever ready to sell your business. Okay, so we're now I've gone through those 4 things. We'll make the presentation available as normal on our YouTube channel and send you the link afterwards. But I would like to now open the floor up to any questions. Okay, so thank you. Just see in the chat box. The first question coming through is, out of the 5 things that I mentioned that boost business value, which one do you tend to prioritize the most and why? Oh, now that's a really good question. The 5 areas that we covered today are all really important, so I wouldn't not do any of them. But I think if I had to focus on one, that would be the recurring revenue streams. And the reason for that are severalfold. Firstly, predictability. Anyone who's looking to buy your business is going to want to de-risk it and make sure that there's a predictable income stream, and recurring revenues are fantastic for that. The next one is they'll want to be able to see that they've got opportunity to grow the business, and if you already have recurring revenue streams, it makes it really easy to scale your business. So scalability is something there on offer if you've already got recurring revenue streams. And I suppose the third point on that is I think it's the one thing that drives your business valuation more than anything else, probably because of those first 2 factors. I did mention the software as a service company. Just to give you a little bit more detail about that, it was £5 million annual revenue business, and 80% of its revenue came from recurring revenue. So it was such a solid and a great company to buy. Instead of having a valuation of 3 or 4 times their profit, their EBITDA, they got a 5 times valuation compared to a competitor who only had 30% of recurring revenue streams, who only managed to get a 3-time valuation. So it makes a massive difference in terms of your valuation and that multiple, if you've got a high proportion of recurring revenue. But the other thing is the one that had the 80% of recurring revenue sold in 3 months, whereas the other one took 18 months to sell. So really, really important. So recurring revenue is my favourite out of all of those 5 ones. Next question. Okay. So the question is, how can I assess my business already has these key value drivers in place, and what tools and metrics can you use? Wow. Wow, that's quite an involved question. So let's have a look at the recurring revenue stream. I would always put our MRR, ask your accountant to add it so that you can understand your monthly recurring revenue and your annual recurring revenue on your metrics. And I would look at your customer relationship management tool if you've got one, or a simple spreadsheet of your customers and how much they spend with you each year and how much of that is recurring revenue, i.e. A subscription. The next one I mentioned was management team strength. So one of the key things on that is, particularly for the key roles, looking at the turnover rate and the attrition of those key roles. Can you demonstrate that you've got people who are staying within the business for multiple years? Because that's really attractive to potential buyers, particularly in your key positions. And the tool to measure that would be number one, your staff attrition, so the number of years that people in key roles have been there. And the second one would probably be your appraisal system and your 360 degrees, so you can show a potential buyer the qualitative feedback that you get. The next one I mentioned was the intangible assets, such as the intellectual property and brand recognition. I often find it's useful to do a brand awareness survey with your customers to show that you've got some value in that. For your intellectual property, it's much more difficult to have a tool to quantify that unless you've actually got patents or you've protected by a trademark or something else. That those in themselves have huge value, and it seems like the more trademarks you have, it increases the evaluation by about 10% each time. The next one I mentioned was growth potential, and the highest measure that any buyer would look for is the increase year-on-year in revenue growth terms, because it shows that sales are up and it shows that profitability is up. So if you do get the chance, I would make sure that you do try to do a competitor review on that as well, to show that you're got a big chunk of the market and you're growing quicker than your competitors. And the final one I said was the financial metrics, and really showing that you got clear financials for an increase in profit. And I would look at the profit margin, the EBITDA margin, as a percentage of your total sales. So that would come through any of your software tools. But as a business buyer, I like nothing more than actually looking at something that's got a 30% EBITDA going up to 32, up to 34. It shows that there's regular growth there and opportunity to earn a lot more. So the e-commerce business I mentioned earlier, I'll use as an example of that. The key things that they were able to do was to show that 45% of their income was from recurring revenue. 45% of the customers made a repeat purchase within 6 months, which they tracked through their CRM system. They also then looked at their managers, and they spotted that over the 3 years, they had 95% of retention, which is just fantastic for people in those key roles. For their intangible assets, they were able to show that there was 72% brand recognition in their target market by asking their customers. And then, and non-customers, they did some surveys on social media. And growth potential, they were able to demonstrate a 30% year-over-year revenue growth for the last 2 years, which was very, very powerful. And finally, we talked about metrics for finances, and they were able to show that they'd increased their EBITDA margin to 15% from 0 when they started. This assessment helped them identify recurring revenue as an area for improvement before going to market. So that's something that's really important to think about. Right, I think we've got time for one more question. Okay. If my business lacks one of those key drivers, how much time and investment is typically needed to develop it before sale? Wow, there's been some good questions today. The time and investment requires really depends on the specific value driver and your starting point. So I can provide some sort of guidelines. So recurring revenue, as you all know already, this is my favorite one. Now, if you have no recurring revenue whatsoever, I think it normally takes over a year, probably a year or two, to be able to demonstrate that you have a good recurring revenue before you sell your business. So I work with a business-to-business services company, and it had to invest some money to develop a subscription-based service. I think it cost I think it cost 5 to 10% of their total income that they'd had. But they really keen to actually create a service that was supported that and develop a recurring revenue stream. And that software then made sure that their recurring revenue percentage was went from 20 to 60% of their total income. So it was much more solid base and then much more supportive, but it did take them about 18 months to put in place. If you have to improve your management team, that should take about the same time, about a year or so. The important thing is to make sure that everyone's got a development plan and you've got a really clear structure for that. I'm doing some work at the moment with a business that's looking to restructure so that everyone on the management team has got key roles in operations, in finances, and in growth, in sales, so that they have a responsibility that they're totally that totally falls under them, and it's making a massive difference. So you want to spend a little bit of time on leadership development and getting the right hires to if you've got a problem with your management turnover. So you can do it in 6 months to a year. Your brand development, your intangible assets can take longer if you have to put something through an intellectual property trademark or patent process, because those in themselves can take about 18 months. Although I would say as soon as you start the process and you've got an IP company that's saying that you should be able to get a patent, that in itself increases the value. And your growth potential, if you can't demonstrate growth and you've had a decline in either your sales or your profit over the last couple of years, I would recommend that you have 2 years on your profit and loss accounts of an increase in growth. So that will take a little bit longer until you're ready to sell. And financial performance improvements take less time than that. You can probably do some really good financial improvements in about 6 months. And that's looking at inefficiencies in your system. It's looking at your staff structure. It's looking at your pricing, and it's trying to make your business a little bit more profitable. We've got a really good program for that in the Sales Success Club, if you're interested in that. But it's as simple as something like an inventory management system or stock takes if you hold products, and it's also down to streamlining the amount of products you have if you work in a product-based company. And for your services, if you're a service-based company, the more recurring revenue you can get in, that would really solidify your finances. So a lot of detail there. Hope I answered those questions. Remember, these are general estimates. The actual time and investment needed depends on your business, and it can really vary depending on your industry as well. But it's definitely worth starting to put the plan in place. If you can focus on improving the 5 value drivers that we've talked about today, it doesn't only make your business more attractive to potential buyers, but the really good thing is it improves the performance of the business in terms of sales and profit for you right now. So it's a win-win situation. You may make all these moves in order to improve your business to sell, but ultimately, if you don't sell, you're going to be quids in anyway, because you're going to have much more sales and profitability in the business. So I hope you've really enjoyed the session today. Those 5 business drivers are the really key things that are going to make a massive difference to you, not just in the future, but in the next 12 months. And I hope you can join us next week at midday on Friday for our session, which will be about how to prioritize the improvements, which kind of leads on from one of the last questions. So thanks for your time today. Do contact us at any time at kirstyparker.com, and we look forward to seeing you next week. And please bring your questions next time. Have a lovely weekend. Goodbye.